a 30-second. Oh,
Sorry.
okay. Well, we're going to transition from, the lesson number one was about the American dream and about that concept. I'm not going to go over all of them again, just to give you a kind of a refresher and how the current setup is kind of designed to have you go one path that, we want the majority people to be in for some reason, right? So we talked about that. And then in lesson number two, we talked about the money mindsets, about how money flows. There's a poor mindset, a middle class mindset, a rich mindset. It has nothing to do with how much money you make. It just has to do with how you view money. And the real quick version is the poor mindset, you make money, spend it. The middle class money, you make money, save it to buy a liability, right? Like a car or a house. And you may have some long-term investments like a 401k or things like that, but not really an active investor, right? So long-term stuff and more saving oriented, dealing with debt. And then the rich mindset really is money comes in. How do I maximize this? How do I invest this? How do I multiply this money that came in? Yeah, that's really the shift in. Doesn't matter if it's $1 that comes in or $1,000 or $1,000,000, same approach is going to work, right? So that's what we talked in lesson number two. Lesson number three, we talked about the quadrants of income quadrants: employee, the self-employed, a business, and investor, and how the quadrants on the left-hand side of the employee and the self-employed, they're very active, meaning you're exchanging your time for money. And then the ones on the right-hand side really have to do with scaling. So if you're a business system, it's all about your system. So think Chick-fil-A, right, is a system, whereas a mom and pop shop is self-employed. Same restaurant, same concept, same swim lane, but totally different approaches. I bet you that restaurant owner is really tired. Chick-fil-A owner hasn't stepped inside a Chick-fil-A maybe in a long time, right? Because the system is just on autopilot. Same with the investor quadrant, which is really about making your money make money. And it's the one that we are really going to zero in here on the next few lessons, is really zeroing in on that investor quadrant, because I feel that's the one that you can do even if you are an employee, even if you do have a job. And it doesn't matter where you're at on the spectrum, you can always become an investor. And you can start to make the money that you're making multiply it and make more money for you. And that's really the goal. Can somebody tell me what the objective is of, pretty much this whole class, or what's the one metric, except for you, Nico? What's the one metric that we're working towards here? Can someone remind me or the rest of us?
Yes, I can. To the goal of the investor is to have more income from his dividends or investments than what he needs for daily sustenance. In other words, for his monthly income. To beat that, that's the goal.
Absolutely.
Nailed it.
Yeah, nailed it, Caesar. So that is exactly the goal. It is for your investments to produce enough money to sustain your lifestyle. And I did want to, just kind of get you guys thinking a little differently. And before we dive into, today's lesson, which is going to be becoming an investor. How do I become an investor, right? And when we filled out the form, I'm not going to show names, but I wanted to share some stats with you guys. So let me share my screen here. We had, about 30 people fill out these forms. So let me just share this. Can you guys see my screen?
Got it.
Okay. So let's look at some stats. I love stats. So let's look at some metrics. So there's about 30 responses here, and these were the top things that our group cared about. So you can see the number one was how to generate passive income, and then how to buy and trade stocks or crypto. Actually, it was how to scale a business, which I thought was interesting.
Number two.
And then how to buy stocks or crypto, how to invest in real estate, how to get out of debt was the least one. Okay, so just something very interesting here to note on that. In terms of the age group, here's some of our age groups if you guys were curious, who filled out the form. So I thought this was very cool as well. All ages welcome. And then the investor level, this was self-assessed. You guys did it, you know, and decided where you were at in what investor level you thought you were at. And, you know, it looks like the majority are in these first 3 levels of investor, and just a handful consider themselves level 4 or level 5 investors out of, you know, all of our participants. So
A couple ninjas.
yeah, a couple ninjas. We can, you know, hopefully speak up if you're in here and share some of your knowledge. But so we want to focus today on what are these investor levels and what's the mindset around this. So before we start kind of diving into an investor, what do you guys think of, like when you think of an investor, what do you guys think of? Like, what's the first thing that comes to your mind? You know, we're going to keep with the interactive part of it today. Like, how about Nina? Nina, what do you think about when you think of an investor? What comes to mind?
Wall Street.
Wall Street? Do you have a picture of what this Wall Street person, is it a person? Is it the building?
The person, it's I guess a guy in a suit on the phone yelling sell or buy or whatever.
Okay. Exactly, that's great. Micah, you think of an investor, what comes to mind?
Yeah, I was thinking of like the day trading type of guy that's on the floor and you know, Nina hinted at it, but it's also a white male. So let's just say that, you know what I mean?
Yeah.
Yeah.
You know, maybe it's an attractive white female in a movie or something, but for the most part, it's the guy on the floor, you know, doing New York stock trading and stuff. But, you know, I understand that a lot of Americans have some levels of investments. So, I mean, if you broaden the description, we can be included too, as long as we are trying to make money with money, right?
Yep. Yep. I think this is like maybe the picture, right? Something like this. Do you guys know that this Wall Street is actually empty now? There's not a lot of people down there anymore, only for like celebrating openings and stuff. It's kind of sad, but it's not like it used to be. It's pretty empty because it's all algorithmic trading. But anyways, little side note. But yeah, even in the movies, I think they play it like this, right? This was the famous Wall Street movie. And that's kind of the image that you think of. How about
Patty says
Dan?
Asian guy with a roll of cash.
Asian guy with a roll of cash? I think casino for some reason, but I'm following. Dan, what do you think of when you think of investor? Who's an investor in your mind?
Yeah, some dude that plays a lot more golf than he does work.
Interesting.
The golfer.
So he doesn't work.
He's-
So what are the feelings?
He's making his money while not actively working.
Right. And what are the feelings around your thoughts about an investor? Do we resent this guy? Do we like this guy? Or this, you know, it's interesting that you all say guy, you know, not a lot of people have said this is a woman.
Yeah, definitely some resentment there for sure.
Mhm.
Yeah, you kind of have like investor equals asshole kind of thing. You know?
It's interesting, right?
It is.
The idea for me is like usually an owner that doesn't want to pay his employees more.
He's greedy. He's a greedy guy, you know, there's a lot of different conceptions about that. Skis, Caesar, thoughts on an investor?
Yeah, very similar to what they said. I thought about a banker. I thought about a banker who owns you know, all this money that we're giving to them, and they're greedy, and they are all after making money from others. That's even worse, I think. It's not just making their money, but making money from others.
Yeah,
They're like a bad guy.
yeah, it's a bad guy. He's greedy. I like, this is really good, guys. This is excellent. Is that Ari or is that Miguel?
It's both of us.
Oh, okay.
What's up, guys?
Any thoughts on when you think of an investor? Any feelings, any images?
I'm with it's Nina, or if I pronounced your name wrong, I'm sorry. I think that was my first initial thought of what an investor is, but also like a real estate mogul, however you pronounce that, where they're like investing a bunch of money, they're driving these fancy cars. But again, it's like male, it's not a female that I picture as an investor.
Okay. Who am I missing? How about Caesar Jr.?
Might be working.
Travis?
Yeah, I get that, the same picture. Like, I
Same
mean,
picture.
that's just like that old school investor picture. I feel like when I think about it some more, it gets like really blurry, honestly, because where do you draw the line of investor, like old school on the floor of Wall Street to like new school stocks go burr, give me my Lamborghini, like, I don't know. The line is so blurred now, but yeah, it's
Yeah.
definitely changing.
Yeah. How about Patty? I want to hear from Patty as well. Any thoughts on an investor, Patty?
Yes, I put in the chat about an Asian guy because we see here in the Bay Area where a lot of Asian people are buying homes cash. They're not giving you a check or or something, but they're investing in. They're not even the owners of the homes. So that's what I thought about uh, a guy with lots of money putting in a cash in a house or a building or something, land, properties.
That's
Yeah.
about to change.
That's about to change. Yeah, and so let's dive into this a little bit, guys, because I think it's really important. We can jump into the stats on how to be an investor. We can get into the how-tos and all that, but you can see very clearly that we have a mindset issue, right? So let me recap here. This is a greedy, bad dude who doesn't like to work, plays games all day, is a mogul, has fancy cars, he's a male. And so maybe Nico said asshole, right? He could be a jerk. He's not a great dude. That's the picture that we've been fed of an investor. And then now we're saying, let's be investors. Yay. Who's with me? And you guys are like, okay, I like the money part of it, but how about the rest of all that we just said? That's the perception, right? And so if you perceive that in your brain, there's going to be a natural resistance to it, and by association to wealth. Because I think we can all agree that investors, every description you gave, they are quite wealthy. They have power in terms of financial clout. They can buy a house cash. They can, have fancy cars. They can make other decisions. They could decide not to work and play golf all day, right? Which is actually work because they're closing a deal, right? It's just a different way of working. They can make more money that day than some people can make in their lifetime while playing golf because they close a deal worth billions of dollars or millions of dollars. It's just a different level of making money, a different level of investing. So I think step number one is we really need to shift that mindset on what an investor is. And for those that are on video, this is what an investor looks like now, like us. Looks like Nico there. I see Micah, I see Caesar. And, we can be investors. We just have to start shifting our brain on what that looks like. And also the narrative around it, that it's this evil, greedy dude. And that's that, you want to know the reality? I would like you guys to actually spend some time and look at philanthropy and who is giving the most amount of money. You're going to be shocked who it is. And then you're going to say, well, they have so much money. That may be true, but giving away $30 billion, Warren Buffett gave the single largest amount of money to a charity a few years ago. And there's a whole deal where wealthy people are going to be giving the majority of their wealth throughout their lifetime. A lot of the billionaires have signed it. And I find it very fascinating that when all these people have everything at the top and they're really at the point of they're just like, you know what, I'm going to give it all away. And it's not even about the money anymore. And I feel like sometimes we get caught up in trying to make the money, and because we never get there in our lifetime, we don't know what it feels like. But I think that there's something to it when you see that obviously it does not cause happiness. We all know that, even though we chase it, money does not equal happiness. But there's also something about the resenting of the rich guy that I think we need to get over. We need to get over that. We need to come to terms with that and really work that in our head, that if you want to be wealthy and if you want to grow wealth, then you're going to have to start looking at that differently. And we brought up an image last week where I think it was about mindsets, and when someone is successful around you, the natural inclination is to be resentment and or find a reason. His parents are rich. Oh, he got this degree, of course, or they went to this school, or so and so. He didn't go through what I went through. That kind of thinking is going to hold you back. The other flip side of that, it's a very dark way of thinking if you really think about it, because what you're basically saying is there's a reason beyond, beyond your control of why something happened, versus taking ownership and taking responsibility for your life, your decisions, and your outcomes. Right? So there's a little bit of a shift. If you're going to become an investor, as soon as I start giving you some of these principles, these parts and these thoughts that we have are going to start to fight you. They're going to start to fight you, right? You can't do this because you didn't go to this school. You can't do this because you look this way. You can't do this because you don't have, a dad that has a trust fund for you, right? And all of those are lies. You can absolutely do that. Anyone can be an investor. All of you can become investors and will become investors, right? That's the whole point of this class, is for you guys to become investors and understand these rules that these other guys, these Wall Street guys and all these guys, that it's not rocket science what they know, but they have. I was sharing with my brother Caesar earlier that they have fed us a lie that this is too complicated for us, that we don't know what we're doing, and that they're better off with our money and they know what to do, and you just be happy with your 0.01% return on your bank account. Keep working hard though and get those raises, right? So that's the lie we've been fed. And I just want to kind of, before we begin, just kind of set that tone that really a lot of this is going to become a mindset thing, and you're going to see that at every single step.
Yeah. I had one question. I think for people that are like my age or younger, the thing, and including myself, and I think we talked about this last year, but I don't know if you would put this in the same boat of what you're talking about, but for me, I would feel like my most unhealthy view, maybe, or most difficult view I had was not, I mean, the investor was one thing, but I would say even more was my view of money, and I mean, I can't tell you how many people I talk to and they're like, I hate money. I hate what it does. I hate what it is. I hate, how it changes people.
Yeah.
And I don't know if that is something we should talk about, or if now, or if it's in the same boat. But I just know that that's definitely a thing,
Yeah, I think it's appropriate because it is part of the same relationship that you have with money. And I think the reason why it's so important is because, in a weird way, I don't want to say it's a controversial subject because it's actually a fact, but I think a lot of people don't realize that they are either repelling or attracting money to them, right? And there's a lot of versions of this that you could read about, and everybody has spun off, and there's scams about it and stuff. So, take what I'm telling you here, but it's almost like when you're in a great mood. When you're in a great mood, isn't everything great? You're like, oh, the day's beautiful and everything's good. And then when it's a bad mood, just everything's just crappy. It's terrible, right? And you just no matter what you do, the whole day is just kind of that way. The day didn't change, you changed, right? The day is the same. It's the same for everybody. Somebody's having a fantastic day in this same day, right? You're having a bad day. Your experience in the day is bad. And a lot of it has to do with what you're attracting back to yourself. And that's coming from your own inner voice and your mindset. So you're right on, Nico. The way you view cash, the way you have these relationships with money, and even with people that make money, is really going to set the tone for, can you survive in that space? Can you make the transition from looking at it in a different way? Are you going to be the one to change your line in your generation? Are you going to be the one in your family you were all in poverty and struggling, and then it hit you, and then things just shifted for some reason? Is that going to be you? If it is going to be you and you want it to be you, then you're going to have a different mindset. Just think about it logically. The mindset that you've had has brought you to this point. If you want to go to a different level, you're going to have a different mindset.
Yeah.
You have to, because the mindset that you already have got you here. right? So
Dan has a question.
yeah, go Dan. Oh, I didn't even see that little hand. I'm gonna look out for
Oh,
that.
you're good. I just didn't want to interrupt you. Well, just a thought. Sometimes I think people conflate money with power and like how they use that.
Sure.
Because I mean, if we didn't have money or didn't call it money, something would always replace it. And like, what am I gonna do? Trade a blanket for a watermelon? Like, we would have to go back to a bartering system, right? But it's I guess it's all those aspects of life that money is used for that I know I need to like rethink my relationship about. But yeah, that's it.
Yeah, that's a great point. And I do want to dive a little bit, just a couple minutes on how about a healthy view? What do you guys think would be a healthy view? When you think of money in its best light, what is it? Can somebody give me some of those responses?
A way
At
to
its best, what
help others.
Tool, fuel. That's what Micah and Caesar say.
fuel, a tool,
Way to spread the resources around easily.
resources. What else? What else does it enable to you to do? I mean, does it not take care of your family?
Fun.
Right? Fun. Ways to support those in my life. Yep.
Security.
Security. Right? When you have money in the bank, more than enough money to pay your bills and expenses, don't you feel that little sense of security? Right? You feel
Freedom.
donations to Nigerian princes. All right, man. Don't fall for that. One day, I think I saw a meme that said like it was billions of dollars, and they're like, if somebody would have just emailed me, you know what I mean? It's like some Nigerian prince died with 15 billion under his mattress. Nobody wanted to email that guy. At its best, really, it's a resource, right? It's all these things that you guys said: a tool, it's security. The resource part is awesome because remember when we first in our lesson 1, we said to pursue your dream and all the things that you want to do, the things that excite you. And this is individual. What excites Dan is different than what excites Micah, what excites Patty, Nina, right? We all have different goals. But no matter what your goal is, you're going to need time and you're going to need resources. You're going to need those two things. And so by being an investor, we have already proven this and gone through it, that it gives you those two things back. It gives you time and it gives you resources. Now, what do you do with that? You can be a jerk, right? You can, flash it and just be whatever, but you can also do a lot of good. A lot of good. You can do a lot of impact. You can solve a lot of problems. You can impact a lot of people. So to me, I think having more money just magnifies who you already are. And it gives you more time and more resources to be who you already are at your best. If you had all the time and resources, Dan, who is Dan, right? When it comes down to it, who are you, Dan? What are you going to do, right?
The best.
What mark you're going to left. So that's what I'm talking about. It's like having those, yeah, Dan turned up to 11. Exactly. I think that, it's a magnifier. And so what you're seeing with some of the people is they were already jerks, guys. They were jerks when they were broke. And now they're bigger jerks because they have more money, right? So let's think about that. So great point, Nico. I think the relationship with money, if you have a problem there and you're struggling with it, let's talk through that, work those things out, because that's going to really prevent you. But let's go into the investor levels and start seeing, what does this all mean? Most of us are 1, 2, and 3. We had a couple in 4 and 5. So we're going to spend some time in 1, 2, and 3 and realize, how do we get to 4 and 5? All right, let me bring up this chart here. You like my Notion views, Travis? All right,
It's beautiful.
Okay, level 1 investor. This person, they're in the rat race. They're working hard, they're doing their thing. They most likely are in debt. Okay, so we're generalizing here. I know everybody's in different circumstances, but just kind of go with I'm gonna get rid of this for now. Let me hide that. Okay, so they're in the rat race, they have debt. Do they have cash flow assets? Probably not. Okay, nothing that is producing money on a monthly basis. They have some debt. Wealth and what this means is not their current wealth, it just means their wealth potential. Let's say you had a lot of money, great, but your potential on this level is very limited, okay? Mindset, they become comfortable with debt and low bank savings. If they make more, they tend to spend it and stay around an average account or debt size. What that means is if you're used to, let me give a practical example. Everybody has a number that they start getting nervous. If in your bank account it dips, you know what that number is, right? You look in your bank account and you see a certain number, you're okay. It dips under that number, you're like, top, I'm gonna eat ramen tonight, baby. I can't go out. You start getting real nervous, right? So that's a very personal thing. And so that what in this mindset, they get comfortable around that number. Here's the really weird part. When you get above that number, it's like it burns a hole in your pocket. You just want to spend it. You want to get right back down to that comfortable level.
You're like, I got extra cheddar, baby.
I got extra cheddar. You got a bonus from work. You got something, whatever, and you don't even know what to do with it. You're like, right? And so that's really that mindset. Okay.
Yeah, sneakers.
Yeah, expensive sneakers. You want to go out, or you just really can't. So what's the issue you guys see with level one? Why can't they progress and build a lot of wealth? Anybody want to jump in? How about Ari? What's problem with number one investor level? Why can't they build wealth?
Because you're always stuck in debt. You're just trying to get out and paying all of it. So you're never able to get ahead.
And what happens if you make more money?
You end up spending more.
Exactly. So that is basically, as Ari said, that is basically the problem with level one. So the goal for a level one investor, if you are a level one investor, I know that you want to make millions of dollars. I know that you want to do all these things, but there's a very specific goal, and that would be to become debt-free. And that's very difficult. I know the majority of people are not debt-free. So I'm going to give a couple alternatives here, because before, you guys email me or get all mad and say, hey, but I got a 401k, I got all this stuff. Let's talk this through. What I mean by that is you really have to really target. It's like losing weight or some other goal, like getting a degree or something. You're going to have to really focus on getting that debt out, because if you are living in as an investor level one, chances are that there's very little left over at the end of the month. And so the rate at which it will take you, just do the math. It'll probably take you a very long time to become debt free. And the issue with life is that, the car breaks down, or the kids get sick, or something happens, somebody loses a job, and things like that happen that occur randomly. And every time something like that happens, it just resets you, or it pretty much like really knocks out your ability to move forward. And that's a very difficult place to be in. So at that level, I would absolutely recommend that your best approach would be to get out of debt, to stop that bleeding, and to really start getting that assets to grow. Now, if you're, let me talk about the caveats around that, or some little outliers. If your job is giving you money for a 401k and they're matching it, that is called free money. You should take it, and you should increase your amount to take as much of the free money that they're going to give you. If they're going to give you 5%, match that and get that 5% from them, right? So that's my belief, because you're getting a 100% return on your money. And as you start learning about investing, you're going to realize that a 100% return is fantastic. That's doubling your investment, and that's what you're getting in some of those. So please understand what I'm saying here. There are always little outliers, but in general, it's a really good thing to get out of debt. And so how do you get out of debt as well? As don't get into debt, right? Don't get into debt. If you want to be an investor, your first thought should not be, how do I get into more debt? It should be, how do I invest and multiply? Just shift that brain over. And so you have to train yourself not to just keep chasing every shiny thing or upgrading things beyond your means. So there's a lot of that kind of goes in that. We'll talk about some resources. I want to spend a little bit more time on some of the resources, but I will shout out that for getting out of debt, Dave Ramsey's approach is very good for that specific goal of getting out of debt. I think he's nailed it. And
yeah, that's what I used.
Yeah, Financial Peace University. It's free at most churches or community centers. It's all over the US. You can Google it.
There's groups everywhere.
There's groups everywhere. It's not a religious thing, even though he is a Christian. It doesn't get religious. It's just about how do I get out of debt? What do I do with my money if you're in that hole? Anna and I did that, and it really, really helped us and kind of focused us on getting out of debt. And it was a very, very powerful, tool. Nina's saying that it's great for credit card debt, but not so much for student loan debt. So that's from Nina's situation with it. But I think, Nina, if you're taking an approach of there's a certain amount of money, and I think he does like a debt snowball thing. So all the amount that you were paying off the other debt, as they get knocked out, you just have to stay in your lifestyle, grab all that money and now apply it to the student loan. And you will eventually, really do a good amount of damage there.
Pablo, I don't know about you, but when we did Financial Peace, it was actually kind of absurd about how much you can save if you really do it.
Yeah.
So it really works.
Yeah, and I get with student loans a little difficult because it could be a large number. And if you already did that and you already have that debt, then that's a big hurdle to overcome. And there's, it's just going to be a little bit harder to get over that. I wouldn't necessarily stop investing in other things if you have student loan debt, but I would still keep attacking it, and keep getting rid of it until you really get rid of it at some point. Any questions on number 1 before we move on? Nope. Okay. Number 2, level 2. So level 2, I got out of debt, man. I did the Dave Ramsey thing. I paid off my debt, or I have a really under control budget that I'm paying off my student loan. I got my 401k going. I got a good income, and I'm starting to build some momentum here. Okay. So let's say out of debt, or at least out of most of your debt, and I'm going to put student loan in a different category, or maybe even a mortgage, right? A lot of people are going to have a mortgage forever. So this is the other types of debt. Cash flow assets still don't have any. Wealth potential is a little bit greater. Why? Because you don't have that debt, that looming debt that's like, that stealing the majority of your income. So let's talk about the mindset here. Love saving and growing bank account with income from their job. So this person likes to see their bank account grow with every paycheck. They don't think they can invest. It's too complicated, don't want to do it, or they will do it in some future when they have enough money saved up. Let's ask, so Micah, what do you think about level 2? What do you see as an issue here of moving? What's going to prevent them from moving up a level?
Well, the fear will obviously play into it because you actually have to take action,
Yeah.
towards being an investor in order to change your position on this. But maybe knowledge about how to build assets. They may know like generally what they should be doing. I should be putting maybe a certain percentage away, but they don't know what to buy with that money as far as assets go. Maybe that's something that could be a barrier.
Yeah, I mean, you pretty much nailed it.
Nailed it.
Yeah, you basically nailed it, Micah. Building assets. So the goal for the level 2 is to build assets. But again, they may not do that or take action because they don't know how, which is investing in education around what type of investing they want to be doing, right? So in our later courses, actually next week even, we're going to start talking about an overview of the 3 primary ways to build wealth. Does anybody know what those 3 primary ways, like if you think about someone that's wealthy, there's more likely 3 ways that they did it. Can anybody tell me those 3 ways?
Real estate, stock market, business.
Yep. Exactly. Is that you, Dan? Yeah, exactly. Those 3 things. So anybody that that has a lot of money, they made it in one of those 3 ways, most likely, like 90%.
Oh, I guess I forgot crypto.
Well, crypto would be in the stocks, those kind of instruments. I would lump that together. So yeah, I mean, so let me just repeat what Dan said. So real estate has a lot of different avenues and how you can make money about it. Stocks, financial instruments, bonds, CDs, crypto, staking, dividends, all of those kind of things. If you don't know what those are, it's okay. We're going to have a whole session where we just break a lot of those down so that this is not a weird thing or foreign to you how it even works. And we'll start from the basics. Like if you don't know anything about the stock market, that's okay. We'll explain how it works. you know, how you can invest with these companies and just the high level of how it works. And then the later classes, we're actually going to split in those 3 categories and learn from other people that are absolute experts in these, like really, really amazing individuals at what they do, so that we can learn how I want to get started in real estate investing. Where do I start? I want to get started, you know, trading stocks and buying stuff. What do I buy? What app do I do? Like what's the how-to? Like, you got me, Pablo. I'm convinced that I need to do this. What's the practical next step? So those will be in those classes coming up. So very soon, after we kind of go through all of these kind of foundational stuff, we're going to be shifting towards that. But we'll have an overview before that. So that'll be like your initial education, but that's not going to be enough. I will tell you right now, an overview is not going to be enough. You're going to need to really dive in. And so what I want to do is give you the overview so you can kind of pick and choose what you're going to vibe with and what you think would be good for you. And then from there, you can dive deeper and learn a little bit more. Any questions on level 2 investor? Any other insights? I will point out that I think level 2 tends to be middle class mindset. Can you guys kind of see it? Like based on the mindsets that we talked about last week, it's more of a middle class mindset. Making good money, you're saving, you got some long-term investments, but you're not actively investing. You're not actively seeking out opportunities to multiply. Okay. So level 3. Level 3 is what Micah said. This person went for it. They bought the stock. They bought a house. They didn't even know how. They just did it. Let's do it. Let's do it. I'm in. Send the contract, you know, send the offer. This person is fearless, okay? But they lack investing skills. I'm going to tell you why they lack investing skills. So let's say that they don't have debt. They now have a cash flow asset. So I'm going to tell you a stat that's kind of wild, but the majority of people reach level 3 and they do not move forward from there. And I'm going to tell you exactly why. Because at some point, you are going to make a bad decision and lose money.
Yeah, you YOLO too much into GameStop.
In there.
You're going to YOLO too much into GameStop. So who here has made an investment and lost money? Raise your hand.
XRP.
XRP, baby. XRP.
Okay.
But
The
I
majority,
mean,
the majority of you in this room, if you've ever invested, you're going to have your hands up. So this is what stops a lot of people from investing. Back to mindset. It could be a story that you told yourself. I once knew a guy that lost all of his money in the stock market. And it's like this old, it's like a spook story, you know, there's a guy, this one dude, I don't even know his name, but he lost all his money. And your question should be, was it in 2000 and 2008, one of those years? Probably, right? Most likely. There's a lot of mindset stuff, guys. And when you're an investor, the market is designed to shake you out. There's an entire psychology around it. It's pretty fascinating. We'll get into it in depth when we go more into the details. But in general, it works on the principles of fear and greed. And they generally want to shake you out with fear. And then they want you to buy things at extraordinary prices with greed. So understanding this, you don't get manipulated as much. Understanding this, you realize, where am I in the cycle? Where am I in the, and what's really happening? So you become a more educated investor. This comes with education. You'll notice that from level 2 on, in the goal, there's always an education bucket. And sometimes 2 of them. Self-education, continued education, right? So it's very fascinating that once you're at level 3, it's all about learning. Learning. You can learn from your mistakes, bad investments that you made, right? I think somebody mentioned you wouldn't have gotten as much student loan, right? Somebody may not have purchased that house at that time. I certainly would not have purchased a home or even sold a home at the wrong time, right? So you can always go back and forth. So you're going to learn from your mistakes, but you also learn from your victories, right? I learned this from Kobe Bryant, man, the Mamba mentality. You learn from your wins, you learn from your losses. Same process, same exact process. So level 3, what they're lacking is they're investing, they're all gung-ho, and then they get wrecked. They lose $200,000 on a home. they lose all of their investment money into crypto. They lose everything in the stock market. The company went to zero. And you know what this person says? Yo, you know what? This is not for me. I'm out. I cannot do this. I
Crypto
don't know what
sucks.
I'm doing, and I give up. Right? You know what separates level 3 and level 4? What do you guys think? Anybody want to take a crack? What separates
Very
level 3 and 4?
They don't
They
give up.
actually learn, yeah, and perseverance for sure.
100%, guys.
Long term.
The only way to get to level 4, yes, it was sad if you lost a home in the 2008 crash. I lost 2, okay? 2 homes, lost all of our money that we had in it. And we put 20% down on both homes. We were not the 0% guys that put no money down. We were the ones that put 20% down, and we still lost both homes, okay? We got wiped out. It was horrible. It was a difficult time. And when I think back, I'm like, wow, that was a real interesting time because it got me really motivated to learn about these markets and how they function and understand how this all works. It could have very easily been a time where I'm not for this and you give up and you quit. And for a period of time, you feel that way. It sucks to lose money. Anybody that's lost money, it's a horrible feeling. You feel ignorant, you feel dumb, you feel like a loser, but you gotta get comfortable losing and failing and then persevering and rising above. I'm gonna repeat that. You gotta get comfortable losing and failing and then get comfortable rising above and persevering. What are the lessons from it? What can I learn? How do I get better, right? So the real mindset is I'm either gonna learn or I'm gonna win. That's it. I'm not gonna give up. I'm not gonna beat myself up. You have to have a short memory and learn, be humble, be open, learn from others, get with people that know what they're doing, understand the cycles, all that kind of stuff is what it takes. Because it's hard out there. The whales are large investors with a lot of money. Market makers, those are people that move the markets. They move billions and billions of dollars at a time to shift things on you, okay? And they control these markets. They're out there and they do this on a daily basis and they eat scared investors for lunch, okay? So the mindset and the perseverance is number 1. To show you how powerful this is, what would have happened if you kept your property from 2008? Anybody want to give me the answer? Would you have made your money back and then some? Yes or no?
Yes.
Yes.
Yes. Bitcoin. Everybody talks about Bitcoin. It's a bubble. It's terrible. It's going to crash. What would happen to anybody that bought the top of any of Bitcoin cycles? Would they be up right now at least 200%? Yes or no?
Yes.
Oh, yeah.
Yep. In fact, if you bought a lot of it, you'd be a multimillionaire by now by buying Bitcoin at the top, which would be arguably the worst. You would be the worst trader in the world if you could somehow buy the top of every market. If you can manage to do that, you're amazing on another level. But if you just held on, you're fine. Don't let them shake you out, right? So these are all mindsets that we're going to learn, but perseverance is one of them. The amount of people that day trade and lose money is 90%. But the amount of people that buy and hold on the long term on good assets, it may be 90% the other way that win, maybe more. Case in point, anybody that bought a house in 1970, are they up or down? Doesn't matter what you bought, man, it's up, right? Same with any asset that was great, or if you bought the S&P or the Dow Jones, regardless of the crashes, We're going to dive into that a little bit more when we talk about those assets. But I want to tell you level 4 is now the status is I have the right mindset. See that? This guy took action but lacked skills. This guy took action and now has the right mindset. And guess what, guys? When you start here, your account starts to do this like uptick. You start to make a little money. You're like, oh, shoot, I made a profit. You know what I mean? Like, wow, I'm in the green. What is this, right? So you have cash flow assets. You are learning from your investing mistakes. Let's look at the mindset of a level 4 investor. Learns from investing mistakes. Not gives up, not gets frustrated, learns. understands this is a lifelong skill and keeps investing and learning. Doesn't give up because they understand how powerful investing is. They keep going. So all you have to do to be a level 4 investor is just not give up. That's the difference between a level 3 and a level 4. It's someone that didn't give up. And what's their goal? Obviously perseverance, you know, buckle down. It's going to be tough sometimes. If you made a bad decision, you're gonna have to write it out. Continued education, and then I even put self-education. You should go out, and it's great to learn from others, but do your own research. Do your own research. Research it for yourself. Look at the numbers yourself. You can do this. Don't tell yourself, I'm not good at numbers. I'm not good at math. I don't know how to invest. You can do it. I bet you a lot of the things that you've done in life that are you're most proud of were things that you thought you couldn't do. So this is going to be another one. All right, let's talk about level 5, because I know we're approaching 7 o'clock here, but let's talk about level 5. This is where we want to be, right? The level 5 investor is free to pursue purpose. We talked about that. That purpose could be playing golf. It could also be doing a lot of good. It could be doing whatever it is that you desire to do in your life. They give back a lot of money and a lot of knowledge. A lot of the people that you see giving back, think about it. They have time to give back because they got the finance part covered, right? And that's why they're able to give back. It's hard to give back. We talked about this in our earlier class. Almost every single person, when we asked, right, Nico? Everybody was very, very giving. Like they want to open centers in other countries and donate money and help the kids and help older folks. And everybody had all this stuff. And I would argue that the reason why we're not doing that right now, if we're not doing that, is because you don't have the money to finance your lifestyle to be able to give you the time to do that, right? Or you just haven't prioritized it, one of the two. So what this gives you, a level 5, is the freedom to pursue that, give back that money, give back that knowledge, or whatever it is that you want to do that's important to you. Wealth potential here is great. No problem, Dan. And so here, this mindset is financially free. So they're not really thinking about finances anymore. Income from assets are greater than expenses. What Caesar said earlier, that was our goal. That is now a reality at level 5. What do they see? They can see opportunities and potential and invest in them. So they're always seeing opportunities to invest in. They see the potential in things and they go for it because they have the knowledge, they have the resources, they can do it. They can buy those properties, they can invest in those stocks or crypto or whatever it is that you want to do. They have knowledge, they understand compounding yields, ROI, net profits, all these terms. If these terms seem weird to you, don't worry, guys. We're going to go over each one. We're going to explain a lot of these things at a very high level. And then if you want to go into one, we're going to get real deep on them. You're going to learn how to read charts, learn how to see when's a good price to buy something or not, understand the market cycles. We're going to have a lot of fun with this. And you optimize investments to increase these metrics. So not only can you invest, but now you know how to make a home worth more or how to maximize certain financial assets. So although you're financially set, they continue to learn. I think that's a very important thought process. You're already good, and then you continue to get better. Does that remind you of anybody? Think of it in a sport, the greats of all sports. They already have all the talent in the world, the raw talent, and then on top of that, they're at the gym at 3 a.m. and they're the last ones to leave, right? And then they work on one aspect of their game on that summer when they're off. I mean, it's a little bit obsessive, but they get insanely good at something because they really want to, and they pursue it. So I'm always fascinated by people that are at the top of something and then act like they don't know anything, and they're just continuously absorbing more skills. It's a fascinating quality in a human, that if you have a strength in an area, you continuously learn in it as if you don't know anything. The other thing is they give back to others, and they're extremely generous. Do you see the picture of this individual? And does that match who we think an investor is? Right? This is an investor, guys. These are all investors, but that level 5 investor, this guy doesn't look like a jerk to me. He seems like a generous guy that is, or woman, that is giving back their knowledge, that wants to see others succeed, that understands and is educated and is willing to educate others. and impact those around them. And because of that, they're going to have a huge impact, and the wealth potential is off the chart. Why? Because we've already know that you can put a lot of things in motion versus having one income or two incomes. Once you start putting a lot of things in motion, it's just math, guys. It just starts compounding. You got a bunch of different incomes. They start adding up, right? So what is the goal of the level 5 investor? To find new investment opportunities, to continue their education, to optimize their investments. Maybe you had an investment, you only made 5%. What's it going to take to get that to 10%? What's it going to take to push that to 20%, right? And then they give back. Inevitably, I've noticed that at a level 5 investor, you're giving back on some level. If you're a good human, there's a part of you that's going to want to give back. It's just part of our humanity. So, these are the investor levels, guys. I know we're at time, but I wanted to just allow a little bit of minutes if you guys can. If you guys got to go, I totally understand. But if you had some questions or want to dive into a little bit of what it takes to move through these, I'm super happy to give the time for that.
Thanks for coming, guys.
Anybody have any questions on the investor levels? Or any thoughts?
So this counts as investing in education, right? Investing in education,
Absolutely.
right? Participating in this. No,
Yeah.
the other thing I was going to say is, I think maybe there's some room for people that have some debt still, and they may have yes in that debt column, and then yes in the cash flow, or they are ready to do more with it. Because I have some. It's not a lot. It's just that it's not. I'm working on it. It's just not completely gone yet. But I don't want to wait for that time period. You know what I mean? Before I take more action towards moving up those steps.
Yeah, and I'll
And I don't
put
mean installment like a mortgage or anything. I mean like debt that you have left over from either educational debt or something like that from before.
Yeah, and that's a tough one. This is more like the generalization, Micah. Like in general, this is a typical situation. Everybody's situation is going to be a little different, which is why I think it's 2 Thursdays from now, we're going to do the workshop event where it's like where we are going to actually separate in groups and breakout groups and really work on your plan. Like, okay, you've heard all these, classes you guys attended, invested your own time in this. What now? What's your plan? What are you going to do? What direction do you want to go in? And let's talk about that, and with others that are in your investment category that can help you out to figure out a plan for what's the next steps look like. But I totally agree. There's there's a bunch of different combinations you can do here, and there's also good debt, right? There is the thing as using leverage for great investments, and all great investors use leverage. So it's not like you never want to have debt or anything like that, but there is a difference. When I'm talking about debt, I'm talking about the type of debt that's really preventing you from making an investment. There's a difference of owing $15,000 on your credit card.
Where you're just paying a certain chunk in interest.
Yeah.
To something with
Or I'm borrowing $100,000 because when I close this deal, I'm going to make 200. That's a totally different type of debt. They both are called debt, but they're very radically different. Even though one is greater, right? The $15,000 one worries me. The $100,000 one doesn't worry me if it's going to produce you another 100,000 because you're in a fantastic, you're doing an
good play
or something. Yeah, exactly. Is it pretty clear? Does anything seem a little fuzzy? Any concept is like a little bit gray? Nina,
No, just
any
looking-
thoughts, Nina?
Go ahead.
No, not really. I was trying to think of where I am on this level. I think I'm at probably a level 2, even though I do have debt. Because I do think investing is a little complicated. I've never tried it before, so I'm interested to learn how to do it and get more education on it.
Yeah, so maybe Micah, what you're saying is it should be something more like that.
Yeah, I agree.
It could be like yes or no.
You'll obviously be more effective if you're not pouring money into debt interest, that's not used. That money could obviously be used in better ways, but the truth is we don't, maybe it's harder to get past that point, but you still want to do something,
right?
In this area where a longer term plan.
Yeah.
Yeah. if
Totally
you're-
agree.
Yeah, I totally agree with that, especially if it's certain types of debt that are a little bit longer term. So that's where it gets a little bit like we'd have to dive into your situation or a little bit more dig into what exactly is going on. But
There's no doubt, like the Dave Ramsey idea, you know, if you did, or whatever the concept is called, like the snowball, you end up realizing that like this is a huge amount that I was paying towards debt, and I can just take that and put it right into investments, and that kind of capital or that startup money isn't, you don't have that when you're still paying on a lot of debt.
right. But the majority of people would take, remember, because the middle class mindset would say, I have this extra money, I should buy a liability.
Yeah, a nicer
I
car or a
go
nicer.
get a nicer car or a bigger house.
Yeah.
So you would end up right back, just resetting again, you know. But yeah, at some point, you need to get to the place where you can take capital and invest it. At some point, where is that sacrifice? What is not getting bought because of that? You know, what's not getting upgraded because you can always upgrade.
Yeah.
So
I think like something I'm thinking about as you were talking about this, Pablo, is like, I do think it's so interesting and that it's like this is just a reflection of almost everything else in our life, you know. It's like everything that we want to be successful at just takes ownership, you know, like and a choice and a leap,
And
you know, and
education.
education, you know,
Right.
it's like the same thing over and over again. And yeah, and I think I think the mindset of like, I know for me, you know, under a year ago I was a level 1, you know, and for me the big leap was even recognizing that I could, like, even believing that I could do it was a huge leap. Like believing that I can be that guy
yeah,
is like, for most of my life was like, no, I'm not that guy. You know, I don't want to be that guy, you know, or whatever.
yeah,
And so yeah, it's just, I don't know, it's cool.
That's what I was gonna say when you were talking about that, Pablo, is you don't necessarily feel like you deserve to be in those higher categories and making more money because, you know, those people are the Wall Street guys, and we know we have an idea of what their backgrounds are and things, and so we don't necessarily feel like we should have that.
yeah,
Yeah, there's almost like
especially
a
if they're not
shame.
doing good with it. Yeah, right.
Yeah.
If you don't think they're doing good with it, and you know, like you were struggling with the idea that, you know, money is greed, and you know, we should be living humble lives and things, but you could do good with it in the long term, and so you don't have to say you don't deserve it or that.
Yeah, I think it's
your
to the
intentions
point-
are better.
Yeah, I think it's to the point you guys made of at its best, it's a resource, it's fun, it's security, it's fuel, it's a tool, right? So if we keep that perspective of it, I think that's a healthy view of money. And then the resourcing of it, I think there's even, you know, concepts in the Bible and other things about just managing wealth as well. Like in that parable where each person got resources giving to them. In that parable, you know, one guy multiplied it, the other guy kind of multiplied it, and then one guy saved it. Well, the master got so mad at the guy that saved it that he gave it to the guy that multiplied it. Doesn't that seem backwards? Like, aren't we supposed to take from the rich and give to the poor? In this
Backwards,
case,
but a pretty good reflection of what actually happens a lot of times.
yeah, he took it from the poor and gave it to the rich. And I think the concept is, you didn't multiply what I gave you. I gave you these resources and you didn't know how to multiply them. This other guy is great at multiplying, so I'm going to give them to him. You know, so it's just a different way of looking at it. But I wanted to highlight something that in this day and age, how we learn. You know, how we learn is really fascinating. So let me just give you a little picture here. Back in the day, you go to a class, you want to learn something, you hope that they're offering the class and you learn. But nowadays, we don't learn that way. So I'm going to give you guys a couple of things. We'll send it in the notes, but you can get a book. Let's say you want to learn about stocks and investing, right? You can get a book, read the top books on it. You can follow a couple of YouTubers that are really good at that. We can even recommend some. You can follow some Instagram influencers. And all of a sudden on your feed, you're going to start seeing some of these concepts, right? You can look online, like resources online on the web, like Investopedia is one of the amazing sites about investing. Investopedia, right? You can learn all kinds of concepts there. There's just so much stuff. You can read about or watch documentaries on famous investors. Watch Warren Buffett's documentary on HBO Max, or look at Ray Dalio's stuff on YouTube. It's unreal. Ray Dalio's content on YouTube is unreal. If you go look to his principles, it's a 30-minute animation. It's animated even. It's like a cartoon. You know, you can go watch it. It's 30 minutes. It's
Powerful.
just pure gold in this video. Like there in the YouTube comments, it actually says, I try to listen to this every day so it can like seep into my subconscious. You know? Like those are the comments on YouTube. Like they're ridiculous. Even his thoughts on the economy, how the economy works. I think he did that video like 7 years ago. It's like it caught people. Like I learned more in this video than in 4 years of economics at university. It's that good. So there's a lot of resources out there. So what we'll do is we'll collect some of those. That's what this column is that I hid. There's just, I want to make sure I'm sending you like really good stuff, but I'm going to put it together and send it to you guys on some of these mindsets and some of the things that really help. The only thing is that some of them get very specific for a particular subject. So since we're all over the place on subjects, we haven't really decided which one yet. I'm going to send more general ones, and then I'll give the very specific ones once we separate into those 3 swim lanes. But
oh, sorry, Pablo.
no, I was just going to say that on a simple level, like think about how you learn anything right now. You could just start following some people on Instagram, watch some YouTube videos. It doesn't have to be like this boring thing that you're going to go get a book at the library. You know, I just wanted to plant the seed that you can learn in different ways. Go ahead, Nico. Sorry.
Oh no, yeah, so good. And I think also the other thing is also the community, you know, and I think that's also something we're trying to build even within our family and friends here. You know, it's like I think there's power in like, oh man, like I know Micah's here every week, you know, and if it's like that we could, you know, next time I see him, we'll probably be talking about investing, you know, and like getting that feedback from each other. I was like, or, you know, I think that's all, you know, something you told me really early on is like, if you want to do something, be good at something, get around people who are really good at it, you know, and that's, that really does start to change. Like it starts to seep in, like, you know, for example, I'm in a house of roommates who all do developing and investing and all this stuff. And the second I got here, they were like, you don't invest money, you don't put your money to work, Nico. And I was like, oh, you know, like, you know, and they're looking at me like I'm stupid. And then I'm like, oh yeah, maybe I should, you know, and then I'm talking to them about it and everything, you know, so it's this, it is really good to.
You even lift, bro?
Yeah, exactly. It was like that. But it's really good to really get around people who think and talk. And you want to be around those people anyway, because generally they're more positive. They have a lot more belief, you know, like it's more encouraging. It's cup half full, you know, and pretty down to earth, smart people. So that's it.
That's a great point, Nico. I mean, the best part, I wrote it here, networking, is who do you know that is already there in that area? And that's super huge because I think of it, I think Ed Milet, if you guys know who Ed Milet is, he's a Instagram kind of like motivational dude. He's super awesome. But he said, like, think of it like a temperature. So like if you want to get warm and you go and hang out with these guys that are like 120, 130 degrees and you're 70, what's going to happen if you get closer to them? What's going to happen to your internal temperature? Will it get to 130? Maybe not, maybe, right? But will it get hotter? No doubt.
Yeah.
No doubt. You're getting to 90 for sure. You're definitely getting to 90. From 70, you hang out with a dude that's 130, you're getting to 90. You may even maybe even hit 100. But what Nico's saying is it's so powerful, because when you get near people like that, what we consider way out there and not achievable is normal for them. They've normalized it. It's like not even a thing, you know? And so once you start looking at these things that are kind of way out of our reach and you make them normal, is when you get them. That's exactly when you can achieve them, because they're not this mystery that's way out there that you can't achieve. You can now achieve it because you see other people that can achieve it, and they're telling you, and you can even see exactly what they do. to achieve it. The easiest example of this is fitness. If you start hanging out with some fitness buffs, it's very easy. They'll slap a burger out of your hand. You know what I mean? Like, it's just really easy. Like, they'll get you to work out, lift heavier than you ever thought you could. And it's just like, whoa, like, I'm really out of my comfort zone here. And then eventually your body will adapt, right? The adaptive principle. And all of a sudden you're squatting a ton of weight, you're strong, you know, you've got like a couple little baby abs coming out, and you're just like, wow, what's happening to me? And then it's not a big deal. It's just kind of normal, you know, because it's around the people that you're around. So it's you can apply that principle here as well. And from our perspective, you know, I know you can do that on your own, and I encourage you all to do it on your own. From a program perspective, we're going to bring those people to you. We're going to bring some people in that are at 130 degrees, guys, in their fields.
Yeah.
And it's up to us to get close, get warm, learn, pick it up. You know, I'm kind of laying the foundations, but we will pivot into, you know, some other speakers and things like that. And but they have to be very specific. And I also want you guys to be at a certain level, so that when they come, they're not like teaching us the basics, you know.
I know my number one strat is hang with Pablo.
Okay. Cool. Well, I really appreciate it, guys. For those that showed up, and you know, the ladies, I'm sure, I hope you had a good time. I'm sure you'll see this on the video. We missed you guys. Nina held it down, and Patty.
Yes. Thanks, guys.
Thanks a lot.